You can see some of the selling that's come in reaction to, you got the dollar, which is spiking. We're talking inching its way back to this 103 level. Taking a look at the 10-year, I've got it, look at this, at 4.12. Wow, that's a move up here. It was at 4.08 headed into this number. Gold, you'd expect to see it coming off a bit here, down to 2171 off 2176 headed into the number. Let's bring in Scott Bauer joining us this morning, CEO from Prosper Trading Academy, here to help us take a look at the number here and market reaction to Scott. Hotter than expected data here hitting the wire, and about what you'd expect to see, a little bit of selling in response.
And that has been the trend recently. And there were a lot of expectations that this number could be a bit hotter. I do want to see, a deeper dive into it other than just the headline and the core. But the market doesn't like this. And, I think the market, Ben, was almost in a situation where even if the number was in line or even a bit softer, I'm not sure the market was going to
like
love the reaction to it. It's exactly. I think this is in a very cautionary state right now. I'd be interested to see what the CME FedWatch tool is pricing in now for June, because going into the number, it was about a 73% probability of a cut in June. I'm sure that has gone down right now.
Yeah, I'll take a look at that in a minute here, but I like the thought here initially, just kind of this in line with the trend that we've seen in terms of inflation sparking its way back up, but also in terms of market reaction to the initial take, right? A little bit of selling, but now as I look, all these indices are ripping higher here. So it's that kind of one step back, two steps forward, focus on the positive, discount the negative. I mean, look, here's a prime example of it. I mean, turnaround Tuesday, talk about it playing out already before 7:35 a.m. I mean, this was quite the reversal after initially selling off here. We're basically up 16 points now, 52.02 in the S&Ps. We're up 5 points from where we were in reaction to the initial release.
So that's why I said, I want to see a deeper dive. There probably was something in the last 30, 45 seconds or so that came out.
It's maybe 67% now, Scott. Sorry to interrupt, but that's where it is. Down from, you said 75?
Almost 75, yeah. So
I mean, it's moving around.
But the market is reacting positively, at least for now, like you just said. Maybe we're going to have a day like we had Friday. Right, Friday morning we got the nice pop through the day, and then midday, the sellers came in because they looked at the number and said, maybe it's not so great. I think we're in this predicament. The market is in this predicament right now, Ben, that we don't know what is really good. Is a hot number good because, or higher than expected number good because it means the economy is still doing well, or is it not good because
it's
rates
doing
are
too
going to
well
be where they are? Exactly. What is the 10-year now? I'm just curious.
10 years at 4.10, which is interesting to see stocks recovering because that's still holding up though. It was at 4.14 for the high. But again, still holding up here, unchanged on the day at 410. And as I look at bonds, they were headed into the number at 121.24, so they're about 10 ticks below that right now. The 10-year is about 3 ticks below where it was. So yeah, I mean, bonds have come off a bit, rates are inching up a bit here, but yet stocks continue to remain very strong and resilient.
The only thing I could think of right now, and again, I've got to take a deeper dive, is that maybe the market was expecting a hotter number, and it's not too hot. It is hot, but it's not too hot. I think it's so difficult recently, Ben, to have an expectation on any of these numbers, whether it's CPI, the employment report, whatever it may be. The market is in this very wishy-washy kind of predicament right now where we don't know whether this is really good or not.
Yeah, a minute ago we were talking about Fed credibility, and I have to argue that the market's really leaning on that right now, right? The fact that the Fed's at the helm here in control, they've been very stressing the point that they're in a comfortable position where they can wait and see. They're leaning on this lag here, but I also think that what we're seeing in terms of this 2 steps forward, 1 back is an indication of how investors are on the edge of their seats here with the all-time highs, with some of the uncertainty you pointed to in terms of the data, what's good, what's not ultimately, and we're trying to figure that out. Basically, it really speaks to the fact that we're walking a really fine line here.
Yes, we are. We really are. And speaking about Fed credibility, I'm going to say something that might not be very popular right now, but talk about the credibility. It was just a couple months ago, the market was pricing in 6 cuts, 150 basis points of cuts. Okay, and the Fed was real, standoffish.
Yeah.
3 cuts,
Right.
75. Well, look where we are right now. Now the
Yeah.
market's in line with what the Fed is. So I think we do maybe have to pay a little bit more
Okay.
attention to what the Fed has been saying because honestly, they've been pretty spot on over the last few months.
Rates got a little bit over their skis, that's for sure, in terms of that move lower below 4%. But stocks have held up, even though we've seen
Yep.
yields inch their way back and some of those expectations getting pushed back. And I did mention that earlier in the show. I mean, end of last year, we thought we'd have a rate cut coming in this meeting this month, right? And now, again, we were just talking about 67% chance of June. So let's move on here in terms of commodities, right? I mean, just to kind of talk a little bit about some of the contributing factors here. Well, we're going to dive deeper into this in just a minute here. Jenny's actually picking apart some of the more intricate details of this number here. So we've got just another a couple minutes before we do that deep dive. But Scott, talk to me because crude prices have been inching up, right? I mean, and so the Fed leaning on this lag ultimately. I mean, if we were to take out 80 ultimately, it would probably fuel and raise some more of these inflationary pressure concerns and kind of point to the fact that it could be a little bit more stubbornly entrenched than we'd like it to be.
Agreed. It has been inching up, but it has not broken through yet,
Yeah.
right? We've reached the top. We've reached that upper range, and it has not broken through yet. So until it does, I think the market is very comfortable with seeing crude in the 75 plus number, 77, 78. If we do break through 80 and it continues, yes, then I think you're going to start to see a lot of pressure. But trading at the top end of the range here without breaking through, again, it's another reflection that the market has just accepted that dynamic for now.
Yeah, as I take a look here, this is one of the products, Scott, for a while we've argued kind of in this range, finding the sweet spot. In many ways, a Goldilocks scenario, right? You've got OPEC cutting production, yet increased production here in the U.S. There's kind of a pushback, a tug of war between some of the demand narrative, right? And ultimately, though, when you look at these price levels here, much like the dollar, much like yields, as long as we kind of remain contained and range bound, this is supportive of the rally we've seen in stocks.
There's no question about it, and that's, I don't want to say complacency, but that's an acceptance. It's human nature. That's an acceptance of what the market is looking at right now.
Conditions.
Exactly. And when we get that uncertainty or we get that move, if we break out, that's where you could see things starting to break down a little bit in the equity markets.
Yeah. I think that really speaks to what we say oftentimes here on the show. Price is king, right? When you're talking about trading,
it sure is.
Especially in futures, because that's exactly what we're looking at is the markets, our participants' market reaction to the data that we have at hand right now. So most recently, the CPI data here, again, stocks responding very favorably to it from 51.97 into this number, Scott, up to 52.11 right now for the S&Ps here. Appreciate you joining us here, Scott, and sharing part of your Tuesday. Thanks to you, Scott Bauer, joining us from Prosper Trading Academy.